Now again, look at the headline. Key inflation report looms on Thursday as traders grow more confident of a Fed rate cut. Powell talked about it's more likely that the next move will not be a rate increase. Something can happen to dash hopes. Could that happen tomorrow? Maybe. If the CPI starts coming in hot again like it did earlier in the previous months. If that's the case or not, we'll see what happens. Even if it's good, sometimes you top on good inflation data. We've seen that happen before. But if we see the inflation data start coming in hotter than expected, if it's a miss, that could be concerns, say cause concern for the market. That will be the catalyst, the CPI or something else or earnings or whatever the catalyst may be. A boatload of divergences. Now we have a triple negative divergence on the 60-minute chart. Powell speaks, the market rallies on hopes of a rate cut. If those hopes are dashed, CPI or PPI inflation data over the next 2 days. We'll see. It is supposed to come in tame on a month-over-month basis. The headline number is supposed to be 1/10%. The core month-over-month is supposed to be 0.2% for the June number. It comes in hotter than expected. Could be a negative reaction to that. Comes in line or cooler. Positive reaction. But even if we get a positive report, you could still top on it. It could be a gap and trap. Seen that happen before with inflation data. The year over year is supposed to come in at 3.1. Again, if this starts ticking up, previously it was at 3.3 here. If it's supposed to come in lower. If it starts ticking up, seeing expectations or seeing it come in hotter than the previous reading, it could be a sell-off. The core year over year is supposed to be at 3.4. That's what it was before. Again, if there's a miss, if it comes in hotter, there's risk of, maybe we gap higher and there's a risk of a gap and trap if we see mixed numbers or something. The numbers come in hotter, come in line and cooler, then the market could rally. Watching to see what kind of candlestick we get for Thursday. We'll be watching, see if we sell off with the CPI or if we get a rally with it. But I'm telling you, if the CPI has a miss and there's concerns about inflation going up, that could be a big catalyst for a market sell-off. Just keep that in mind. Now, just something to pay very close attention to is Apple. It still has this negative divergence it's forming. Last divergence we got, the bullish divergence, gave us this move higher. Prior to that, the negative divergence gave us this move lower. Bullish divergence gave us this move higher. Apple's forming a divergence. Well, Nvidia is not making new highs. So far, it has not been able to make new highs. Apple's been helping the NASDAQ. Apple's had a 7-day winning streak forming this divergence. When it turns, it's probably going to turn hard. We moved above my boundary. We had a possible bear flag, and I told you we had one here. We moved above that level. So again, we're above that potential bear flag. Come back and fill the gap on a closing basis. We're still with Nvidia making a lower high. Doing what we did over here. Again, big red bar. You turned down, traction off the 20, got traction off the 20, and then you came back up and you made a lower high. Right now, make a lower high, there is risks that we come down and see Nvidia drag market down with it like we did over here. This would be a bigger drop because we'd be going back to 75.60 if we try to form a head and shoulders pattern. Now, Nvidia could still go higher and form a divergence if I'll drop back below the 10 and 20 period moving average, a massive negative divergence in the weekly time frame, and so far, you're not moving to new highs. This is a huge red flag. The NASDAQ, helped by Apple the last 7 sessions, but as we've rallied back up on Nvidia, we're not moving to new highs. We're just going back and filling the gap over here on a closing basis. So the head and shoulder patterns are still in play on NASDAQ and S&P and still very much in play here on Nvidia if we start to sell off. Nvidia has this massive negative divergence at our topping tail from a few weeks ago. Nvidia, same thing over here. When it peaked over here and it dropped over 20%, we had the peak right here, a topping tail, very similar to what we had right here in the weekly time frame. We got the lower high, and then we began to turn, and we saw that move back down. Could see something similar to that if we can't make a new high. Here, if we do make a new high, you can form a divergence right here in the most recent price action. You don't have to. Bitcoin and coin has big moves up, moves down. Could see a big move down for Nvidia because, again, in the NASDAQ, more volatility. But the tech sector, again, I'll be watching. Do we get a divergence here? Do we confirm a lower high like we did over here and then get the drop? We'll see what happens. Nvidia is rallying. It is not moving to a new high while the NASDAQ is. That is a red flag. Now, Apple completed a 9 count yesterday with the S&P. The NASDAQ completed it today. We have a 13.9, and we're closing above the upper Bollinger Band. We did that over here. We closed back below it. We had a corrective move. This will likely lead to a reversal with the negative divergences in the daily time frame for Apple. Sometimes you get the 9 counts. You go a little higher, and then you turn 13 or 9. This is a 13. We pull back a little bit, and then we got a trend extension. Here, again, this is telling us we're either going to get some kind of pullback or reversal. In all likelihood, probably be a reversal because of the negative divergences in the daily time frame for Apple. NASDAQ 100 and the S&P both completed these 9 counts last week in the weekly time frame. You got a 13 fall by 9. It's a double sequence count reversal signal. Again, you could get the 9 count, go a little higher as we're doing, and then begin to turn. Over here, we did the same. We went just a little bit higher and then kind of sideways and got the sell-off. If we close back below the upper Bollinger Band here in the weekly time frame, that will likely start the reversal. But again, we'll be watching to see what kind of candlestick do we get by the end of the week. We're going to have the CPI data tomorrow, the PPI on Friday. We've got earnings. Moving into the heart of earnings season now. We'll be watching these things. Again, testified the last 2 days. He talked about modest progress on the inflation front. We're going to get the inflation data tomorrow. It's supposed to be cooler. If it comes in hot tomorrow, a miss like we had for a couple months earlier in the year, we had 3 months of misses. The market could start your sell-off. It could be another catalyst. It could be earnings. Whatever the catalyst may be, I'll be watching to see if these counts play out in the weekly time frame. Now, this is important because we got here on the NASDAQ weekly chart. We completed a 13 fall by 9, going a little bit higher for this week right here. But today, we got a 9 count sell signal on the daily chart. I've said we've got a 9 count in the weekly time or in the monthly time frame right now for NASDAQ. S&P weekly chart got the same count in the weekly time frame. We're going higher than the 9 count. Watching to see what kind of bar we close with here in the weekly time frame by the end of the week. Again, these counts are likely going to produce a reversal based on the divergences in the weekly time frame. As I said, the 9 count, they're usually turn with it or go a little higher and then turn. Now, we completed the 9 count today. We got it yesterday on the S&P, again, closing back above the upper Bollinger Band here in the daily time frame. So again, when we had it last time, we got the 9 count. We closed back below the band and we got a correction. The 9 count is telling us, hey, we're either going to get a correction or we're going to get a reversal. This 9 count right here, we went a little bit higher, but corrected sideways, going higher and then pulling back in this trading range. S&P, again, NASDAQ both now have 9 counts in the weekly time frame, 13 nines in the weekly and 9 counts here in the daily. To see if we get a close back below that upper Bollinger Band. S&P got it yesterday. We got those black candlesticks. I told you candlesticks have to be confirmed to mean anything. Otherwise, they're meaningless. Candles of indecision. I told you candles of indecision can mark a reversal or be a continuation pattern. It was a continuation pattern. Now we're above the upper band. We got the 9 count yesterday on the S&P. We got it on the NASDAQ today, and we have it last week on the weekly charts for both of them. Both of them got it last week in the weekly time frame. Again, we're above the upper band. We'll be watching to see how we close. We'll be watching to see how the market reacts with the CPI. Does it sell off with it? Is it a gap and trap tomorrow? Do we gap higher and then start a reversal? Sometimes you top with it. Or do we close strong? Another day we'll be watching to see what happens. Do we close back below the upper band? Here we're getting the 9 count. We're overthrowing it. The last one we got, it was confirmed right here. We corrected sideways. NASDAQ had a pullback. This one right here, we had a pullback. So 9 count is telling us we're either going to get a pullback or a reversal. Even the 9 counts in the weekly time frame, it's likely, and the negative divergences on the weekly chart, it's likely we're going to see a reversal. Grinding higher, light volume, again, the holiday week, light volume, Couple of candles of indecision. This is the retail investors pushing this higher, not the institutions. I want to talk about the NASDAQ daily chart because I am getting some warning signs there as we complete the 9 count today. We close strong, but we're drifting higher on lighter volume, and we're forming negative divergences on indicators like here with momentum, on the RSI, the MACD, on the money flow. A lot of indicators are forming negative diversions. And we got the same warning signals that we have right now over here. We got this pullback, okay, and then we got bottoming signals there, and over here we got some warning signs. We got a pullback, a littler pullback there. Trend signals remain bullish here. Trend signals went bearish, and then here again a pullback. Trend signals remained bullish. Now this doesn't necessarily mean the top here, but the circle is showing up, and it could change. It can move with tomorrow's bar, but when it starts showing up, it's warning, hey, a pullback or a reversal is at hand. We may see it move a couple of bars, whether we go up or down, but it is, when it starts showing up, it's saying, hey, could get a pullback or reversal like it did over here, like it did over here at the bottom, like it did over here. And again, we had these signals give us this pullback, the sideways move. Bars went to red. This is bars reflecting the momentum. Bars are green right now. If we start seeing bars turn red and the momentum line turn red, we start seeing that happen this week or next week, to begin to see the 9 counts play out in the daily time frame and on those weekly charts that we got last week. But again, we have a divergence, and we have the warning signs here on the NASDAQ that are starting to show up. What happens with the CPI tomorrow and PI on Friday. Tell you what though, if that CPI comes in hotter than expected, we could see a sharp reversal. Market has a negative reaction, assuming that it would come in hotter than expected. Previously, we've had a couple hot reports. We missed a couple of those reports were supposed to be fairly good, and they came in hotter than expected. See something like that happen, again, could be that we get a CPI reversal, a gap higher, or maybe the CPI marks the peak. It's done that before. Seen the inflation data mark many reversal points, and it's marked a couple of tops. NASDAQ daily chart here. Again, I want to make it clear. My signals remain bullish, but again, negative divergences in the monthly and the weekly time frame, and now in the daily time frame. We've got now a triple negative divergence that is now formed on the 60-minute charts. At a divergence as of yesterday, we now have a triple negative divergence. Again, the signals remain bullish. Divergence is complete on the oscillator, and with things like right here with momentum and other indicators, we start seeing the daily divergences begin to play out. It will spill over into the weekly time frame, and we will see those signals begin to play out. Here we have the divergence, but the signals still remain bullish. The bars are still green. The momentum line is still bullish. It started to turn bearish when the NASDAQ had all those momentum signals turning bearish, but we didn't flip the trend as I talked about. The bars didn't even turn red here on the S&P. My signals remain bullish, but divergences are in place now. We completed 9 counts on the S&P and NASDAQ this week now. And in the weekly time frame, the 9 counts last week. Divergences, and with the NASDAQ 100 and QQQ, I've got QQQ up here again. I want to just draw it to your attention. Again, we've got these divergences on the MACD and the awesome oscillator, but QQQ hit a psychological level of resistance today, and that is that we hit the $500 level, closed above $500. It's a psychological level of resistance for QQQ. The daily chart, again, our momentum signals continue to have a bullish reversal of conditions. We start seeing the red bars, we start seeing the diversions play out again, then we can see that spill over into the weekly time frame. Divergences in the weekly time frame, we've got it on the awesome oscillator, we've got it on the MACD. Had those 9 count sell signals last week in the weekly time frame. It's a NASDAQ weekly chart. S&P 500 weekly, again, we've got the same divergences going on with the awesome oscillator and the MACD. These are going to play out and likely produce a reversal rather than a correction like what we had over here in 2022. You had these divergences, and it ended up producing a reversal rather than just a corrective move. We got to see a reversal begin to happen in the daily time frame that will spill over into the weekly time frame. We'll begin to see red bars. MACD will begin to cross over. They'll start moving down. We'll drop below the 10-week moving average and eventually the 20. Again, Bitcoin has already dropped below the 20-week moving average. The weekly charts have already turned bearish for Bitcoin in the weekly time frame. The S&P is likely to now play catch up as they have moved in opposite directions. S&P has moved higher and has moved lower. There's a massive red flag, like Bitcoin, but Bitcoin's sending a message. This rally is going to likely end and take the S&P and NASDAQ back below their 20-week moving averages. Bitcoin's had a sharp drop. The S&P and NASDAQ are likely going to get a sharp drop. Bitcoin took out the 50-period moving average, moved back to the 200. S&P and NASDAQ are likely going to do the same. The 200 is likely going to be up here at around the 4,900 area by the time the S&P reaches it. And if so, you've got the head and shoulders pattern that I've talked about in play. We have Divergence is still very much in play here in the daily time frame. And again, I'll be watching for red awesome oscillator bars. When we start seeing this happen, lead to a reversal in the weekly time frame. Start seeing it shift in the daily time frame, will likely spill over to the weekly time frame very quickly. P is forming multiple point divergences. We had a divergence develop yesterday. We now have multiple point divergences developing. You had one here on the MACD, and now you're getting another one here with a lower high. The same thing on the RSI. Watching to see what happens with the divergences here with the CPI tomorrow. And the signals remain bullish, but divergences are now in place in the 60-minute time frame, and you also have it daily, weekly, and monthly time frames. The same thing on the 60-minute chart with the NASDAQ. Again, you've got a multiple point divergence that's developed here. The MACD, the same thing, a multiple point divergence. Gapped higher, pull back a little bit, and then rallied for the rest of the session, forming a triple negative divergence here in the 60-minute time frame. NASDAQ and S&P. Talking about these trend lines, again, this channel line, the red one parallel to the lower boundary here from this low to this low. We're just below that now. We've inched here above the trend line connecting this peak and this peak. We've moved just above it. This red upper boundary channel line's in play. We're forming negative divergence on momentum as well, just like the MACD and the RSI on these 60-minute charts. Back over here again in the consolidation and the bull flag, I was talking about rallying up to one of these trend lines. My signals had continued to be bullish. We already reached the one here, the blue one, and now we're blowing through it and hitting the red one. We're just below it. Again, forming negative diversion. So we'll be watching. Do we end up, maybe gapping higher with the CPI and then getting a gap and trap? Gapping higher and then start moving in the other direction, or create a doji or spinning top or something like that with our wide range bar that we got today in the daily time frame. We'll be looking at these divergences in the 60-minute time frame and daily time frame with that CPI data. NASDAQ had a trend line from the low here and the low here connected with this low and parallel to this upper boundary. Again, we've moved slightly above that one. Here, I've just taken it from this low to this low and this high, and we're just below that for a channel. And again, momentum is forming a negative divergence here. We'll see what happens. NASDAQ 60-minute chart. Another thing to be aware of on the Pring parameter, we're forming this negative divergence in the 60-minute time frame. Again, NASDAQ's moving to a new high. Here we're making a lower high. So the negative divergence on Apple. Nvidia is not moving to a new high, and Bitcoin is not participating in the rally. It has collapsed, and it now has a negative correlation with the S&P 500. S&P is likely going to join Bitcoin. I warn you again, they had a positive correlation, but he thought, Bitcoin, we're going to go to the 100,000, and it collapsed over here, 23.5%. And then, okay, we're going to go to 100,000. And then it collapsed here, 25.5%. It's collapsed 27.5%. This lower high, getting this lower high, and while the S&P and NASDAQ moved to a higher high, they're diverging. This is what happens at turning points in the stock market. and with Bitcoin. They diverge from one another. Bitcoin is in a bottoming process right now. It may or may not be done with it. It still may get one more leg down. There's more support just below, model support and VWAP support. But while we're down here at the lower Bollinger Band for Bitcoin, having been below the 20 period, collapsing below the 20 period in the weekly time frame, again, this wasn't supposed to happen. We were told it wasn't going to happen, but yet it did. And the same thing right now with the stock market. People are saying there's no way it goes down, but yet going to follow Bitcoin's path lower because they have a long-term correlation, but we have a short-term decoupling. Bitcoin will likely bottom and attempt to rebound, not be able to get back above the 100-day moving average. The S&P is likely moving down towards it. And again, the low here, as I talked about with Bitcoin, that formed the double top, the McDonald's pattern, which is now being confirmed, but will probably form some type of bottom and get a counter trend. S&P and NASDAQ are likely headed back to their confirmation lines for the head and shoulder patterns that I've been talking about, as well as Nvidia. And that's why I took the time to show you the Nvidia chart. Likely going to follow Bitcoin lower, and if it does, well, so will the NASDAQ. Bitcoin couldn't make new highs. It got lower highs, and then it got more lower highs on this attempted rebound back up. Nvidia right now is setting up a lower high, at least so far. I just want to continue to point out, I won't spend a lot of time on it, but you got the S&P moving to new highs. Bitcoin formed a double top, and it made a lower high. They diverged from one another. It happened back in 2022. The S&P topped. Bitcoin got a feeble rebound. It collapsed further, and the S&P started to collapse, and it collapsed by 15%, about 6 or 7 weeks or so. Keep that in mind. Wrong. Bitcoin's not participating in the rally. It's a huge warning sign. Like, at least so far. Now that might change. Did you hear what I said? It might change, but so far, Nvidia is not moving to new highs, at least so far. And if it does, to form a negative divergence here in the daily time frame, you get a triple negative divergence in the weekly time frame. But at least so far, it's not moving to a new high. Another concerning sign, because NASDAQ is.